Welcome to the Algo Trading Strategies channel. In today's video, I'm going to explore a long-only strategy based on the Chandelier Exit. So this is a volatility indicator that you can see on the chart on the Bitcoin USDT chart on Binance, the daily time frame. So as you can see in the uptrends, you have the Chandelier Exit, which is green and below the price. So as you can see, it nicely follows the price and accounts for the volatility of the price. When the volatility gets higher and higher, the Chandelier Exit leaves some space between the price and its line, so it can act nicely as a stop loss. And today we are going to use it as a signal for a long entry and an exit only for long positions. So if you don't know already, the goal of the channel is to find the best strategies that are based on technical indicators usually. I can also use, of course, the sessions, the fair value gaps, or other data points just to decide entry and exit signals. And once I've got the best strategies that I select using sensitivity heat maps that I often show on this channel, I construct a portfolio using the modern portfolio theory, aiming at maximizing the Sharpe ratio of the whole portfolio. So essentially, the goal is to construct a portfolio of automated strategies that are as less as possible correlated between one and another, and to grow an account very steadily to the upside without too many drawdowns. So let's focus on the rules of our Chandelier Exit today. This is very simple. When you have the price that closes, the candlestick that closes above the green line, so it means also that the direction of the Chandelier Exit, which is based, by the way, on the average true range, which is usually used for stop losses or a volatility metric. So when it's green, the Chandelier Exit exhibits a direction of 1, and when it's red, the direction is considered -1, so bearish trends. So we enter when the direction is 1, so bullish, so green here on the chart, and when the price, of course, is above the line. So it is the case, of course, here. And then we close when the direction changes, switches to red, so for example here, or when the price gets below the green line. So it would be that candlestick here. We close here. So this was a bullish trend on Bitcoin. And of course, within the range, it's not always so beautiful. For example, you would have entered on this candlestick, I believe here, in this price action, which is ranging, but also trending to the upside a little bit. And you would have closed at around this candlestick, I believe, this one, or this one maybe. So yes, this is still profitable, plus 7% here. So let's look at the sensitivity heat maps in the daily and the 4-hourly. So here's the sensitivity heat map in the daily time frame, which shows the Sharpe ratios. So the greener the cell, the higher the Sharpe ratio. It gets above 1 and also 1.3, which is very good for an annualized Sharpe ratio. And the x-axis is the Chandelier Exit length, and the y-axis is the Chandelier Exit multiplier. Indeed, you can change the parameters of the Chandelier Exit. So it essentially uses the last 20 candlesticks to calculate the average true range. And the multiplier is essentially by how much you multiply the ATR to push away your green or your red line from the price action. So of course, the higher the multiplier, the less trades you will have. But if you choose a multiplier that's too small, you will have more trades, of course, but also more fake outs, more false signals. So as you can see, the best Sharpe ratios are on the bottom left corner of this sensitivity heat map. Let's look at the returns also. So here are the return multipliers, not expressed as a percent, but really as a multiplier, how much you would have timed your money, in fact. So the green area is not very nice here, so not very easy to decide in the daily time frame. And also I just checked the number of trades, and usually it's above 100 only for the multiplier of 1. So the top row here on the sensitivity heat map in the daily time frame for the returns, if I aim for more than 100 trades, which is usually the case for the selection that I do on the strategies, I want more than 100 trades, which means I want a certain number of occurrences in my backtest so that we have some statistical conviction or confidence into the strategy. So yes, essentially with these green cells, yes, the performance is not too bad, but the number of trades is less than 100. So let's ditch the daily and let's go to the 4-hourly. Here's the 4-hourly version of the heat map, the Sharpe ratios here. The best area is this big one here, so we could choose values from this bluer area and almost any value here. Let's look at the returns. So again, for the returns, I don't like this bluer area. There are sharp drops in performance from one row to another. For example, with a multiplier of 2, you get a sharp drop in performance compared to the multiplier of 3. So that's not excellent, but yes, maybe I should have explored other multipliers which are not integers. For example, 3.5, 3.6, 3.7, up to 4, and so on and so on. And same for all the rows, not only integers, to have a more definite resolution in the heat map. Maybe we would have discovered better bluer areas from which we can choose values. So let's stick to the row at the bottom, where we are going to choose a chandelier exit length of 20 and a multiplier of 5. So here is the backtest with the equity curve in blue, where you start with a capital of $1,000 in about 2017 or 2018, and you end up having almost $25,000 at the end of the backtest. You can see all these green positions. These are the long trades that we took along the backtest, and during that same time interval, Bitcoin would have done about 25x from $4,000 or so in 2017 and ending at about $100,000 in 2025, the beginning of the year. The only problem with just holding Bitcoin is you would have to handle very deep drawdowns of almost 80% sometimes. For example, after the 2021 peak, all-time high at the time, you would have to ride all the way from $65,000 down to $15,000, the bottom at the time. So almost 70% drawdown, which is a lot to endure for your portfolio if it's just Bitcoin holding. But by using our Chandelier Exit long-only strategy today, you would have less deep drawdowns. Of course, it's quite a bumpy ride also, but not as bumpy as just holding Bitcoin. And that's the whole point of all these strategies that I'm studying on the channel. This is to reduce the risk compared to just holding Bitcoin. And of course, if you want to hold Bitcoin for the long term, it's perfectly okay. You will have a small part of your portfolio that is dedicated to algo trading. That's what I do at least. So hope you liked the video so far. If it's the case, please hit the like button. I also want to explore short strategies in the future. Why? Because until now, I've explored mostly long-only strategies, which is fine. But of course, there is likely a high positive correlation between these long strategies. That's why I'd like to have also short strategies, and why not on other assets? Because I've mostly studied Bitcoin-based strategies for now. So let's wrap up the video. Also note that on the premium member area, I'll explore more Chandelier Exit rules, more strategies that are based on it. So if you are new to the channel and you want to see more backtests from me in the future and see how you could construct a portfolio that are based on automated strategies, I'm going to use Python to automate them mostly. Please subscribe to the channel, and I see you tomorrow for another backtest. Bye bye.